In this section, we will check the most significant pattern that creates some of the best trading opportunities. A price pattern is a recognizable configuration of price movement that is recognized by using a series of trendline or curves. So to identify these figures, we will use the same setup that we are familiar with, based on colors and structures seen in the first part of the Academy. We will divide the patterns into three subcategories: triangles, wedges and pennants, head and shoulder and inverse head and shoulder, double triple bottom and double triple tops. We're gonna check in this video the first of the three subcategories about the figures. The first one is the triangle, wedges and pattern. A triangle, wedge or pattern is a pattern that foresees two trend lines converging, which could mean a pause or a consolidation in the measured trend, or even a losing momentum, with an inversion of the trend. Triangles can be ascending, descending, or symmetrical, and usually, but not always, are considered to be continuation patterns. Considering that the EMA 21 rule is satisfied, these are the cases in which we will open a position. In the ascending channel, we consider to open a long position when the price break and close above the upper structure and retest it. We consider a short position when the price break below the trend line, the structure, and retest it. In the descending channel, we consider a short position when the price break and close below the lower structure and retest it, and we consider a long position when the price break above the trend line, the structure, and retest it. In the symmetrical triangle, we consider a position short or long when the price break either above or below the trend line and the structure and retest it. Now we move to the other section, the wedges. A wedge is a pattern created by two narrow trend lines, in which the price is losing momentum and slowly converging in a reversal break of the trend line. As a reversal pattern, there are just two types of wedges, a rising one and a falling one. It is related to decreasing volume, which tend to show a losing momentum of the trend. To trade the wedges, we will open a position at the break of the trend line and of the minor support structure as in the examples. If the expected breakout zone of the wedge will be on a strong level, the breakout probably will be higher, giving us a better confirmation of the trade. The last figure we're going to check is the pennant. It's similar to a triangle and indicates a continuation pattern too. It's created by two converging trend lines and could be seen also as a minor ranging market or a minor retracement of the price. As for the triangle, we will open the position on a pennant at the break of the trend line and at the resistance support structure retest. Now we're going to check the second figure that we learn how to trade, the head and shoulder. A head and shoulder is a pattern that happens when the price creates over a structure or a trend line 3 or 4 different peaks, with the central one higher than the other two. The figure creates an imaginary left shoulder, a head, so a higher peak, and a right shoulder, with the neckline that could be a structure or a trend line, on which the price bounces. It is usually a reversal pattern and indicates that the price couldn't create anymore a higher high or a lower low in the inverse one. To trade this pattern, we wait for the break and retest of the neckline of the structure. In the last section, we're going to check how to trade the double, triple top and the double or triple bottom. This simple tool is one of the Plankton's favorite, and it occurs when the price bounces 2 or 3 times or more over the same price level, support or resistance. In the case of a double bottom, the price will create a visual W, and in the opposite way the price creates a visual M pattern. It is common to spot this figure over the stronger resistance or support such as weekly or monthly ones. To trade this pattern, we will wait in a similar way of the head and shoulder for the break of the W or the M neckline structure.